Yes, I'm selling my apartments in Business Bay. Happy New Year, everyone, and Happy New Me, I guess. I know, the title of this video might have sounded too dramatic or simply confusing to you. How can I root so much in all my past videos for Business Bay, yet announce that I decided to sell all my apartments there? Don't they make me a ton of profits? Well, to answer this question and let you know why I decided to start the year by selling out all my apartment portfolio in Business Bay. Watch through this video as I'll tell you more about my investment ideas and future plans. Before I jump into that, hit the thumbs up button and be generous this year. Subscribe to see more. Getting back to the question, don't these apartments make me a ton of profits in Business Bay? Well, yes, they do. However, that is just the short answer because for me, every single investment has a life cycle. And in this specific case, this, in my opinion, was the end of my property investment life cycle, specifically in Business Bay. So let me tell you briefly what do I mean by this? Because I'm sure you would think that, well, you have the property now, you renovated it, you furnished it, you rented it out. Why not just keep it and earn all that rental income? And to be very frank with you, I don't know why. Even to me, it sounded like a very hard decision, but I felt like in this specific case, I need to trust my instincts and do the same thing that I was doing throughout all these past years and sticking to this property investment life cycle that I kinda built for myself. And by this, I mean that every single investment for me starts with basically looking for that specific opportunity. In this case, I was looking at off-plan investments a couple of years back, even before COVID, in Business Bay Dubai, and that's when I started investing in them. So I got a payment plan. I started with 0% interest, paying that monthly, and I think it was quarterly payments to the developer. In the first cases, it was mainly Damak because I invested through them. Then throughout all this period, the price was also increasing for the property. I also moved to Dubai and I started working in Dubai, which enabled me to refinance my property when it was completed. Because when the property is in construction, you can't get a loan on it or simply a mortgage. So I waited until the property was completed. I was already earning money in Dubai and I was able to refinance that and basically get all my money back and leave 20% down payment for my first property and 40% down payment for my next properties. And the remaining LTV was covered by the bank. In that case, I basically returned the money that I invested, only left a small percentage there that was required by the bank, and have started furnishing and marketing the apartments. In this case, I benefited from really good interests for the mortgage and also from the even opportunity to get this mortgage because at that time I was already employed. I could get this fairly easy in Dubai, get my money back and use it for other opportunities. Simultaneously, after furnishing the properties and renting them out on long-term contracts, I was already able to see some profits coming back to me. So besides the money that I already returned through that refinance model, I already was getting some returns on that investment because I was renting it out while paying my small mortgage fee, which was about, I think, one half of the rental amount that I was marketing it at the start. And the other half was the profit that was coming to me minus the annual maintenance fees for the properties in Dubai. Basically, after few years doing that, the property returned me pretty good ROI, specifically that I bought it at very low prices prior to even COVID. And that was bringing me around 25 to 28% ROI every single year. And that is after I covered the mortgage monthly payment. So that was really good and still is, which even now recording this video, I'm still asking myself, shall I even do it? But I think that if I look back to my investment journey, I was always doing this, investing in the right opportunity, waiting until it's built, then basically furnishing it, marketing it, renting it out. And when the market was already mature, everything around that property is built. You have these small stores, you have different kind of yoga studios, restaurants already built there. The actual end users, not the investors, the actual end users will pay more per square meter to move in, which is for me the end of this property life cycle, because at that time you kind of reach the peak of the price of the potential apartment that you want to sell, and you either want to rent it out, continue doing that, or you want to sell, maximize your investment, well, your return on investment, and use that money to invest in something else. Basically, in this specific case, I reached that stage and I wasn't sure if I want to wait more to just capitalize on the annual rent, where the actual investment was pretty fruitful. I most probably doubled the price of that initial price of the apartment. So my investment is now 2 times higher. So why not capitalize on that, get my money back, and invest in something new? Obviously, there might be risks associated to this. However, if you don't take risks, you won't be anywhere. And that specifically applies to me because I've seen that throughout these few years that I was already actively doing property investing, that I need to take some risks, not just rely on, one source of income and just see that if the investment opportunity was already realized, I need to take the next risk, move on, calculate it, obviously, don't just take a risk, and see how it turns out for your next investments. Adding on to this first point is that once in a few years, I have to capitalize on my investments and cash out of them. Because if I don't do that, the market might shift. Currently in Dubai, it's a seller's market. So you will expect to put really high prices and capitalize on your investment. I'm not sure how long it will last. I honestly don't think this will grow 2-3 times more, in the next few years. I'm pretty confident that it might be stable or even increase a little. But at the same time, I don't want to gamble with this. And I would rather gamble with a new opportunity, get that money, and basically put all my risk into a couple of new opportunities, of course, diversify it and see how they go. Cashing out is also very important because you don't only capitalize on your investment, but you already, in my case, used some leverage money like the ones that I got from the bank to sustain this investment. And now, since the property is valued way higher, my ROI is not actually going to be only on, the whole amount of the property. It's only going to be on what I invested in this property, plus obviously my time. So if I would basically sell this property at X2 of the initial price, then I'm not actually going to make X2 of this investment. I would probably make 4X's on this because I only left 20% down payment there and I will make double in profit. Not of the 20%, but of the full amount. So if you do the maths right, it's a pretty lucrative investment that I consider that I need to cash out right now and even invest straight away in something new. Or at least this is just my judgment. So this is how I feel. And this is what I was doing for the last 6 years. And I tend to cash out once in 2-3 years because if I look at my patterns in the past, every time I cashed out, I was doubling my capital. So the capital that I'm, putting towards my investments, it was always doubled when I was cashing out. And in this case specifically, it's going to be even more than double. So I think I don't need to be greedy and just cash out now. And hopefully in 2-3 years, I will double this again. Third point is that in my opinion, market already reached its peak for sellers. So that again, going back to the first 2 points, is that probably it's better to basically cash out now. Is the end of this property's life cycle. And I don't want to risk it with just waiting longer and seeing if I can be more greedy and take more profits out of this investment, because it might not ever happen. So that's my opinion. The market is pretty mature now, and it's been growing very, very, very fast for the past few years. And I'm not sure how long it will be sustained, because I mean, it was sustained by a lot of, Russians and Ukrainians coming to Dubai, for example. Now, this average or this figure is definitely lower, and I'm not sure who's going to supplement this. The following point is that there are new opportunities and ideas that I was considering, maybe even building more into the hospitality aspect. So probably if you watch me already, you know that we have with my partner in Bali 20 apartments, 20 villas since 2019. And maybe I was thinking to add more, maybe just build it even by myself. This was also something interesting that I was considering. However, I'm also looking at new opportunities in Dubai, and even in a grown, mature market, you find a lot of opportunities, and you might be better off if you have the cash in your hands. That leads me to the next point, which is the ability to hold the cash, and whenever you see a good opportunity, you will be able to act upon straight away. So basically, cash out from this investment and have a alternative way or alternative opportunity to invest in. How would I do that? Simple. I would just take out this investment, put it in a very high savings account, such as Wio Bank, for example. They were offering around 5.5% if you keep it with them. And that would bring me pretty good returns until I find that right good opportunity that I can actually act upon. And I would invest maybe into something that I wouldn't be able necessarily with smaller amounts of cash around. This leads to the next point that I want to touch upon, and these are the distressed offers and market corrections. So whenever these happen, and these happen every single time in growing markets, in smaller underdeveloped markets, every time you have distressed opportunities, but they mainly happen in growing mature markets, because when the market reached its peak, or at least the people feel that the market reached its peak, then that's when you would probably see more corrections happening. And that's when you actually want to be the one who holds the cash in your hands and wants to act quickly and get the best deals that are available there. Nevertheless, finally, why I think this is also the right way out is because it will give me just simply more freedom to, act on some ideas that I had and probably postponed for a long time because I wasn't able to do them. I didn't have the cash, and maybe some new opportunities to co-invest with some of my clients, some of my friends, investors, and so on to get bigger projects, maybe buy a full floor. If you are interested while watching this video, please do reach out to me, because I'm always happy to meet new people, new investors, and potential new clients or partners. So definitely looking into these bigger projects, maybe even commercial real estate. So anyway, if you have any thoughts or you relate to this video somehow, drop the comments below. I'm really curious, and I will reply to every single one of them. And if you found this video useful and you liked it, don't forget to like the video, drop a thumbs up, subscribe if you're super generous. And with that, I will see you in the next one.